Good morning, everybody. Welcome to the Reserve Bank and to our March monetary policy statement. I'm Alan Bollard. The Reserve Bank today has decided to cut the official cash rate by 50 basis points to 3%. We have a picture of a world economy which deteriorated extremely rapidly last year, with financial losses and extreme volatility in place. We've since seen some substantial monetary policy and fiscal policy, orthodox and unorthodox responses from many countries, but we still expect negative economic forces to remain the dominant feature of this year, 2009. The timing and the extent of the recovery in the global economy is still extremely uncertain. In New Zealand, this has led to difficult trading conditions. We've seen a fall-off in export revenue, we've seen weak business sentiment, we've seen investment and employment dropping. We continue to see house prices falling, and households are pushing up precautionary savings quite significantly, and this adds up to quite a weak spending profile. Inflation, on the other hand, continues to abate in New Zealand. Well, we've cut the official cash rate by over 5% in just over 6 months, and that means that interest rates are now very stimulatory, and that's been a very big stimulation brought into place in a short period of time. There's more in the pipeline in the sense that we do expect to see further reductions in lending rates for businesses and households resulting from the cuts that we've already put in place. We note when we look at credit in the economy that credit growth is easing. This is in line with the weak economy in New Zealand, but we do expect banks to keep lending conservatively and appropriately in order to support the necessary recovery. As well as this big set of cuts in monetary policy, we've had now large stimulus from fiscal policy also. And those two, together with the significant exchange rate depreciation we've had, will work to help support the recovery in the New Zealand economy. We expect activity in New Zealand to trough around the middle of the year and then to gradually increase. But we do note it's a huge global crisis, and this does imply considerable uncertainty for the New Zealand forecasts. The New Zealand recovery, consequently, could be later or it could be slower. As the economy does trough, we note that we expect the rapid cuts we've seen in the monetary policy so far to slow down. Any future cuts are likely to be much smaller. We shouldn't expect to see anything like the near zero rates of some countries happening in New Zealand. We do need to retain competitiveness in international capital markets with our rates. Where will we go from here? Well, we will assess the need for any further reductions in the OCR by looking at developments in the global economy and developments in domestic economy as well. And we will also now be looking for signs of response to the policy loosening that has been in place for some time now. Thank you, ladies and gentlemen. That's the end of the formal part. We're happy to answer any questions. To assist me, I've got Dr. John McDermott, Assistant Governor and Head of Economics, and Tim Hampton, who is Head of the Forecasting Team. Are there any questions for us? Yes, thank you, and we'll ask you to take the microphone since we're webcasting.
Dr. Bollard, your recovery scenario is predicated on the, you say, extraordinary policy responses that other countries are taking, kind of doing the trick for our trading partners. How confident can you be about that? Have you got your fingers crossed behind your back a bit when you say that? Because there's not much evidence of it yet, is there?
No, it's been a very unusually deep and rugged set of turbulence in international economic and financial markets, and we've had to watch our colleagues in Northern Hemisphere central banks carrying out traditional monetary policies and fiscal policies, and then getting into unorthodox, and then getting into what Mervyn King, Governor of the Bank of England, has called unorthodox. So they're doing some quite radical things. We haven't had to go near that sort of space, but we're obviously watching very closely how successful they are in doing that. Difficult to judge that yet, because there's a lot of confidence in it, there's a lot of uncertainty in it, and the world hasn't been in this state with these possible monetary and sometimes fiscal policy tools available to them before.
Can you explain, Dr. Bollard, why our rate, I know you said it in the statement, but why it's so much higher than some other countries around the world?
Well, we're actually lower than Australia now, but we're still in the higher of the rates, and that partly reflects the fact that we've traditionally had higher rates and we came off a higher base. But more importantly, I think now it reflects the fact that the New Zealand economy, while clearly hit with this global shock, is actually in some ways in better position than those countries that have had to deal with very big and failing banking sectors, and more recently with very big export manufacturing sectors like East Asia. Those two regions have had it much harder than we have. In addition, they're finding a lot of trouble understanding where their housing sector is going to go. In the States and Britain, they still can't see a bottom to it. Our housing sector has been better behaved, and we haven't really changed our forecast very much on that. We're also aware of the fact that very low rates starts to hurt savers in New Zealand, and part of the recovery in all of this is going to have to see savings build up. We're already seeing some of this, but they're going to have to increase quite a lot, and we think they will. So we don't want unnecessarily to penalise savers. And of course, some of the people who invest in the New Zealand economy are foreigners and will also be looking for reasonable returns in that as well. Bear in mind, as we talk about these lower rates, that some of the investors will be looking at the real rates rather than the nominal rates, so they'll be taking inflation off there.
There's current bank deposit rates which almost double what the official cash rate now. So, I mean, savers aren't doing that badly at the moment.
Well, I'm getting a lot of letters from unhappy older people who are complaining about lower rates. The fact is they're probably getting better rates in New Zealand than in almost any other OECD country, but people who've relied on investment income for savings are getting hit at the moment.
And what would you say to people who do rely on term deposits to top up their incomes?
I wouldn't say anything particularly to them. Sorry, do you want to rephrase that question?
Well, just wondering, people that are relying on term deposits and their interest because that's dropped off, do you have any suggestions or any advice to those people?
Yeah, go and get a good advisor. That's always been our advice. At the very least, go to a good website like Sorted. Take advice on this, advice on how you structure income and wealth pulling out of the recession is just as important as getting advice during a period of higher possibilities and higher income.